Hello and welcome back to our video series on trust fund recovery penalties. In this video, we are going to be discussing who the IRS can deem a responsible party for paying the trust fund recovery penalties.
Right. So when a corporation or an LLC incurs a payroll tax liability, the IRS is going to conduct an investigation to determine if there are any individuals that they can hold responsible for that trust fund portion and therefore also collect the money from those responsible persons. And while they're conducting the investigation, they're really going to start at the top. They're going to look at who the officers of the corporation are, who's the CEO, the president, the CFO, etc. And they're going to sit down and have a formal interview with those individuals to see if there's anybody else or to see what their roles were on a day-to-day basis.
Exactly. The second factor that the IRS is going to take a look at is the designation of certain employees for handling the payroll taxes, or if this has been delegated to another employee, which doesn't necessarily exclude them from being held responsible.
Right, in that same vein, where we're talking about control, the IRS is also looking at the ability of an employee to hire and fire other employees. Again, it doesn't matter if the individual that they're investigating owns the business or not. It's really a matter of whether or not they were responsible, what their duties were during in day-to-day operations. And so with that, another factor that they're looking at is signature authority on bank cards. So if they go through the bank records, what they are going to do, and they see that that you've signed checks or something like that, they're probably going to conduct an investigation where they sit down with you, again in a formal interview, and they're going to ask those questions. And it may be the case that you don't really have the authority to necessarily write checks at will. You have to get directed by a manager or an officer to actually write the checks.
Exactly. Finally, what the IRS is going to take a look at is willfulness. Now, what we're talking about here is that someone knew that they needed to pay the IRS this money, but instead knowingly paid another creditor ahead of the IRS. In our next video and final video, we will be going over trust fund recovery penalties and how the IRS goes about assessing and collecting them.